everybody, thanks for tuning in. It's JEDIOSHI's Skills Day Thursday. Today we're going to cover one of the most important and fundamental building blocks in any analyst's or any trader's toolbox. And we had a small vote last night. Thanks for participating in that. We're going to cover trends today. We are going to cover a few slides, some of the basics, some of the fundamentals. We're going to look at some cartoony type things, but then we'll do some real live work on the Bitcoin chart. So this might be a little boring at first. This might be a little basic, but I can't underscore how important this is in your ability, whether that's charting or trading, is to look at a chart. This is one of the first things that you'll do. You look at a chart, you identify trends, you identify support resistance. We're going to cover that today. This is going to help you become a better analyst, a better trader, and better with charts. So let's dig in. So, the definition of a trend. The trend, it's simple. It's the direction of the market, right? And the whole purpose in understanding trends is to be able to participate. Whether you're long, you're short, you're a long-only investor, you need to understand when you're in a trend, what that trend is, and to also understand when the trend looks to be ending, when it reverses, when it goes from one to the other, and all the specifics and the details within that. So we know that markets don't move in a straight line in any direction. They don't go straight up, they don't go straight down. They're characterized by what's called zigzags. And we call them zigzags, and we'll see a better term for them here in a minute. But these are a succession of peaks and troughs. Higher highs, higher lows, or lower lows and lower highs. So it's this direction of the peaks and the troughs that matter. So, and that's what constitutes a trend. So we know, I hope so, and if you don't, it's the definition of an uptrend is a series of successfully higher peaks and troughs. Conversely, the definition of a downtrend is a series of successfully lower peaks and troughs. So the third way is sideways. And sometimes you hear this, we're either up, down, or sideways, right? But those are the three directions of a market. Sideways is a series of horizontal peaks and troughs. So you have uptrend, little cartoon here. Uptrend, higher highs, higher lows. Higher highs, higher lows. Downtrend, low, lower high, lower low, lower high. And sideways, you have a series of horizontal peaks and troughs. And one of the most important things here is that this concept can be applied to any time period, whether it's 5-minute chart, 15-minute chart, 1-hour chart, daily, weekly, monthly. So you can look for long-term trends, short-term trends. The next chart, or the next slide, this is an example of a trend. Now I pulled it from this is a bond yield chart, and it doesn't matter. The only thing here is to demonstrate and illustrate trends. So here you have a long-term uptrend. And notice how we went from one angle to the other. That's kind of interesting. We'll get into maybe a little bit of that. But here is a downtrend, and then a brief period of sideways, and an uptrend. So the very first thing that you should do when you're looking at a chart is to try and spot these. Just your trends. Actually, we'll get into an exercise that will help build these, and that may be the very first thing you want to do. But when you're looking at a chart, you pull up any chart, the first thing that should speak to you is, are we in an uptrend? Are we in a downtrend? Are we sideways? Could we be changing trend in the moment? And really this goes to who's in control, what we've talked about for months now. Who's in control? Are bulls in control? Are bears in control? That entire concept is, which trend are we in? So this is a real life example. This is on a daily on a bond chart, but it kind of gives you that big picture. And the other thing with it is you do have degrees of trend, and we won't get into that today. There's actually quite a bit that we won't get into today. I'm building content for the JEDIOSHI website, and this is kind of an intro to the trends course, but the trends course will have a lot more parts and pieces to it. So we're not going to cover everything about trends today, but we will cover some things that will arm you to be much more suited for analyzing your charts and for trading. But back to this. Major trend, short-term trend, and intermediate correction periods. Okay, obviously the major trend on this chart, this is the Dow Jones. I guess back to 1997. This is an old chart. I pulled it. So from 1995 to 1998, for the 3-year period, we're in an uptrend. So the major trend was up. However, and again, this is the daily line chart. Inside the major trend, we have shorter trend corrections and down periods. So I just drew 2 on here for you. One here in the middle of 1996, and then one in 1997. And then we have an intermediate term trend, which is down here at the end, which is more of it's a bigger trend, but it's within a broader major trend. And so within trends, you have sub-trends. And again, we won't get into that quite extensively today, but you have to understand and realize that even within your major trend, you have smaller trends that are contra to your major, that can be contra to your major trend. You know, in the live stream yesterday, we looked at the grand major trend for Bitcoin, and you zoom way out to all-time price action. We're bullish. It's up. The macro major trend is bullish. It's the same with the stock market, with equities. The major macro trend is up. And until that changes, everything else is a intermediate or a shorter term correction. But the major term is up. The major trend is up. So just want to show you that on the Dow. And when you slice up your trends from major to minor to micro, even down to the 5-minute, right? It depends on your view, what you're looking at, what you're trying to ascertain. Are you trading the 5-minute chart? Then the 5-minute chart's important to you, and you're looking at the micro scale. Or are you trading the 1-hour chart? That's up to your style and your system, right? So understand where you are in the grand scheme of things, right? That's important. So the first thing that I think is important in trend analysis, the first step in trends really is support and resistance. So I briefly said that when you pull up a chart, you should just identify trends. Probably the first thing I do actually is just draw horizontal lines. Support, resistance, support, resistance. They act differently in an uptrend and a downtrend. So you have peaks and troughs. These are resistance and support levels in an uptrend, and there's support and resistance levels in a downtrend. So let's look at that. I kind of said zigzags earlier, but these are resistance and support, or support and resistance levels. So in an uptrend, it'll be characterized by higher highs, higher lows as you step up. The high points are called resistance points, and the low points are called support. Conversely, in a downtrend, as you make lower lows, lower highs, lower low, lower high, these low points are support levels. The higher points are resistance levels. So it's all about looking at a chart and identifying support and resistance levels. So, and I wrote here, a firm understanding of the concepts of support and resistance is necessary for a full understanding of trend. So you have to understand support resistance to then understand trend, to then take it to the next level. So again, these are all the building blocks in your wall of becoming a good to great to excellent analyst, and also a good to great to excellent trader. So, and the other note here is that if a support or resistance level is violated, then a trend reversal is likely. So we may get into that in a little bit, but my system and what I do, especially when I'm day trading, is I am all about breaks and breaks, right? And I do bring in an indicator for that, but I am constantly looking for support resistance breaks, and not necessarily on horizontals, although that's important. And when we get into the real-time stuff, looking at the Bitcoin chart, we'll start drawing this out, and we'll take a look at it, and we'll start making mental notes and everything. But support resistance, this is what you need to know. You need to really be able to open a chart and just start drawing these levels. Again, this goes for any time frame. The 5-minute, the 15, the 1 hour, the daily. The higher you go, the more important these levels are. That's what you need to know. The higher grade the chart, the stronger the signal. So if you're on a weekly or a monthly, then those are going to be your strongest levels. If you go down to the 5 minute, it gets weaker and noisier. That's when you may hear me talk about the noise. As you go lower time frame, the noise increases. So again, support resistance levels in an uptrend, support resistance levels in a downtrend, be able to spot those. Pretty straightforward. Trend reversals. Now this is the next level, what you're looking for in reversals when resistance or support fails, right? So a trend reversal, say a double topping pattern. So you see how this chart basically ran up to a resistance, pivoted, turned around, found support at a certain level here, went back up to the next level, found resistance, fell back, found support, rose again back to the old resistance and was rejected, then fell through support. That's a failure of support. See how resistance held here and support broke down? So that could be a either a flip, we call it a flip, or when you switch it, so this support can now becomes resistance, and we'll look at that on the Bitcoin real-time chart. Conversely, in a downtrend, when you're finding support and resistance levels, see how this one came, found support, then resistance, now down to next support, back up to resistance, found support again, confirmed support, moved back up, broke resistance. This is now support. Whenever you flip support resistance, it switches and they reverse their roles and it becomes the opposite. The other key note that you need to know is that support and resistance often acts as an area or a zone. It's not necessarily a hard and fast line in the sand. It's more of an area. And we'll see that on the chart. But we draw these as hard lines, but this is more of an area. You come up to about this area, you fall back. It's the same with dynamic lines, and we'll get into that. But support resistance levels act as areas more often than not necessarily a hard number. When we get advanced, we'll talk about whole numbers too, and those are psychologically important. But what you need to know is that this can and often acts as a zone in an area, not necessarily a hard line number. Okay, next chart. Oh, we talked a little bit about this, but this is support and resistance flips. So prior resistance can turn support, and prior support can turn resistance, or turns resistance. So here's what it looks like on a chart. We have this line, this asset, whatever it is, coming up, bouncing off, finding resistance, bouncing off, rebuilding what I would call rebuilding strength here, making the next run at the resistance level, breaking it. Now this is a retest of resistance to find support. So when you break through a resistance, you retest it, confirm support, you're up. That's now support. Conversely, in a downtrend, this came down, found support, bounced off, came back through, broke support. Now this support is resistance. So again, these act, I have the same comment on here, but these also act as a zone. So it's, and you see that in real life. It can be more of an area than a hard line, but this whole concept is something that you need to understand so well that when you look at a chart, you say, okay, yeah, that's support. Where are my supports? Where are my resistances? And then you kind of go from there. And these are the key levels, that prices tend to act around most often. This is an example of, this is the NASDAQ 100 chart. Then this is a current chart. This is daily. So you see how this whole level resistance. So resistance becomes new support. I don't want to do too much analysis on this chart, but then you're asking yourself, do we need to come back and confirm support? Whatever. You get into all that when you're doing analysis. But see this is just a real life example of resistance becoming support. You could say this was tested slightly, but see how this was never fully tested until we came back and retested it. that's definitely a notable, because you broke through resistance, and not until just recently had you come back to confirm support. So this can be very bullish, where you came back, you retested resistance, now it's support, and now you have support and a base to move up. Okay, now we take this and apply it at an angle. And that's all trend lines are. And these are also known as dynamic trend lines. But these are basically support resistance lines at an angle. I know some people don't like these, but there's, they're in every textbook, and they're important. You see them play out in real life. This is what I use on lower time frames for day trading, is I want to look for breaks and breaks of support and resistance lines. Again, the entire purpose though is to either confirm trend or to understand that you're changing trend from one to the other. And that's what I really dig in on, really, is how do you go about changing from one to the other? Do you go through a period of horizontal sideways from a downtrend to an uptrend, and also from an uptrend to a downtrend? Do you have to go through that period, or can you get flipped from one to the other? And how does it all work? But anyways, a couple of keynotes here on trend lines. The more touches you have in the line, the stronger it gets. I will draw trend lines on 2 lines, expecting that I get a third touch. 3 is 2. You only need 2 points to make a line, but 3 is probably a better and a stronger trend line. However, again, the more touches you have on the trend line, the stronger it is. So if I'm looking at 2 trend lines, one has 2 touches, the other has, say, 4, 5, or 6, then I would trust the 4, 5, or 6 trend line more than just the 2. So, but again, this is what it looks like in an uptrend with support on the bottom. In downtrend, resistance is along the top. So that's all you really need to know about that. So dynamic trend lines, or aka trend lines, are basically support and resistance lines at an angle. Okay, let's go to the next one. So I use trend lines, the way I use them is to spot reversals, right? And potentially a new trend. When you break down of support. Well, this is what I look for, is when you have support and you break support, either in an uptrend, you may be reversing to a downtrend. However, you may go sideways for a brief period of time. Also, from downtrend to an uptrend, you break through resistance from the other side, and you may switch from a downtrend to an uptrend. But you don't necessarily have to switch from one to the other, right? So as you zoom in on your charts and you start maybe dialing in on the lower time frames, maybe you're looking at the 15-minute or the 1 hour, you can very well go from downtrend to sideways to downtrend within a macro or a larger downtrend, right? So you have to think through the way I think about it. I explained it to a friend, so it's kind of a rainbow, right? You start with the inner level, or maybe an onion that you peel, and there's a core, and then you have levels out. So when I look at the smallest time frame, it sort of fans its way out to the higher, and then it ripples back in to the lower. And they all sort of work together in a fan, or a kind of rainbow, if you will, or whatever. That's how I see it. Like, if you're going to reverse trend, let's say you're going to reverse daily trend, you're going to see it first on the lowest time frame, right? So say you have a signal system, and we'll get into that one day, right? But say you have a signal system, and you have your daily is short. It's a short signal, so you're in a downtrend on the daily. Now your 5-minute chart may signal long. Well, it may signal long, but then go back short, even within the larger time frame. But your 5-minute may then go to a 15-minute short to long, then to an hour-long signal, then a 4-hour-long signal, then a 12-hour-long signal, and then all of a sudden your daily goes long. So that's how they work. And again, it's kind of like the rainbow effect or the rippling effect. You're going to start seeing a trend reversal on the lowest time frame that'll eventually build to the higher time frames. And it works both ways. So you work up and you work down on the time frames. And so that's how I work my charts, is I'll look at the lower time frames to try to give me a signal for what ultimately might become the higher time frame. But not necessarily. You may get a 5-minute signal that doesn't even transpire to the 1 hour. Again, the lower time frame you are, the noisier everything is. And what I found in my system is the lower my win rate is, significantly. I think my win rate on the 5 minute is closer to 50%. It might not even be 50%. I get a lot of stops, it's choppy, it's noisy. I ratchet that up, and this is how I'm optimizing everything, right? I ratchet that up to the 1 hour, I can get to 75%. I've had some runs at 80%. But then again, it's the whole comparison of like effectiveness, right? We'll just stop there. But that's how you kind of go about this, is looking for trend reversals, support resistance. So I would take a chart, any chart, and we were going to do this live together, or you'll watch me. We're going to take a chart. We're going to start drawing horizontal support resistance levels. Those are important levels. Then we're going to draw trend lines and look for broken support. That's how you spot trend reversals. What we won't get into here, but I am building content for a class, is trend classifications. We talked a little bit about that. Macro, micro, that sort of thing. And then support and resistance. Support and resistance, remember those are the horizontal lines. There is a world of psychology around the support and resistance. You also have degree of penetration, right? What constitutes a flip? And as we know, there are areas, right? But when can you penetrate a level or an area without flipping? And when do you look at penetration and breaks of lines, and when do you determine they're flipped, right? So the other thing is importance of round numbers. Round numbers are key psychologically, Dow 30,000, Dow 35,000, Bitcoin 50,000, Bitcoin 40,000. Those kind of whole numbers, even, you see them because they're psychologically important. Actually, they act as magnets, believe it or not. Like if you're, like when we hit Dow, I think 36,000. It was like, we're going to 36,000. I mean, we're so close now. We're gonna run right into it. On trend lines, this is the same thing. Degree of penetration. How much can you break a trend line while still keeping it intact? That's a whole area. Also, there's what's called the fan principle, and you see it a little bit, especially in parabolic markets. You'll start out with a trend line, and then you make additional. Say you're bullish, and you're going in a bullish, kind of a bullish parabolic move. You'll start out with a lower angle trend line, and as you go parabolic, your trend lines fan out, and you get higher angle lines, and then you start seeing those breakdowns as you finish that cycle. Relative steepness. The steepness of trend lines does matter and does give you tells and indications on certain things, whether it's momentum, strength, whatever. Steepness is a different topic. There's channels. So channels would be a support resistance line together in a trend. We can take a look at that later. And then percentage retracements. This is when you get into retracements off levels, etc. So that was what I had for you today for the skills, and just want to run through support resistance and trend lines just to get you those basic concepts. But again, this is probably the most important but fundamental block in the building of your wall and your strength. And when you look at a chart, you need to be able to easily identify support resistance and then start drawing lines. And the only way to do that is to do it. So let's do it. We're going to do it together. So let me switch over here to the Bitcoin price chart. Okay. The first thing I would do, looking at this chart, I start drawing lines. It's that simple. And you can always take them off. Okay, there's a line there, a line here. And I'm doing areas, right? What's interesting is, there's kind of an area here. I have this, now the bigger ones, right? Okay. So I've got this guy back here. Let's do that one for the top of that whole thing at that top. I have the middle lobe. And you can get carried away doing this too. So you don't want to get too crazy. However, you want to identify the big ones, the big pivots. What a pivot is a change in direction. So it's a major change in direction. For example, this run here to the top here at 64. That to there was a major direction change. right? So that's a major level in my mind, comparatively on the chart. Major level there, major level here. Major level here. Not as major, but pretty critical here. Then you have out what I would do, and what I shared with you guys in the Telegram was basically, looking at the levels going up. And one note, and I know I just have it on here, I didn't say anything, but I like to change to a line chart because this is the easiest analysis you can ever do, is on a line chart. When you start doing candles with wicks and everything, it gets next level complicated. So again, the easiest thing to do is look at a line chart. And so I have a couple levels here that I shared with you that I'm looking at least for the near term, is this floor. See how this was a floor? Support, sorry. This is a support level, obviously. Price held support until it broke it. Now, guess what? It hasn't been retested as resistance yet. It's interesting, right? So we have this level, corresponding a little bit with this level. The one thing about line charts is that you'll find that, they take a daily close. So sometimes you'll have, like, for example, a wick down to this level, but it's not showing it. That's why areas versus lines, that's when it matters. For example, look at this line right here. Remember, this was from this area back here, right? At 40,600. This was resistance, broke, came back through, broke right down, again, tested from the bottom side, resistance, and it actually broke through. But it didn't just break straight up, it had to break through, come back down, go back up again. Right? So it broke resistance, came back, fell through this resistance, what could have been support, wasn't support, came back through, boom, broke resistance again. Later came back and kissed it or touched it, confirmed support, and off we went to all-time highs. So here we have this area, right? What was interesting to me, and probably to you, is that to that to that to that. So to me, that's pretty significant level at 40 to 41. This is why we did the whole thing about beware of the 40 to 41K pivot or resistance level. Beware of a rejection off this level. But we didn't reject. We had a minor bobble here at 41. This is on the line chart on the daily. So maybe a few hours or so of sideways here, but then the bulls took it. If I'm doing this too, I'm just starting to put levels here on the turns. And that's all I do. So for support resistance, you just take a chart out and you start dropping levels on your turns. And then you start looking back. You look left, right? You look left, right. You look left on the chart to see how strong that level is or was. And that's why I drew all the way back here. But, this will help guide you in understanding these levels so that then you can do analysis and you can even trade off levels too. So, for example, real-time Bitcoin chart came down from 69 to 35 in line chart. We know it went deeper than that, probably on a wick, right? But we found support level here, broke up through 40.5, which was that significant level. Then we came up, found this recent level, this recent pivot, broke that, and now we're coming up to this. So what I'm expecting, I shared with you my best case scenario for what I think could be a nice A leg of the retracement. And we won't get into like ABCs in this lesson. We'll stick with support, resistance, and trend lines. But I think either we reject here, that we confirm this is a support turned resistance. Either we confirm this is now resistance and we have a pullback before further advancing, which, yes, advanced levels could be more like a wave 4, but could we come up here and turn, come up here, do like a wave 4, and then a final push up here to 51? Like I shared with you, that would be more my best case scenario, is we come back up here, alt separate, whatever. But again, let's stick with support resistance and trend lines. So again, support resistance levels tell you where in the chart things are apt to either slow down, speed up, or change direction. All right, so horizontally, this is how I'd paint it. And you can throw on as many lines as you want. A lot of times what I would do is I'd take a chart, I would apply my support resistance lines, and then I would look back. And then over time, or I would do a back test, or over time, you understand kind of what's critical and what's not. And I do that a lot more, honestly, on the dynamic trend lines or trend lines than I do on support resistance lines. But there you have it. Again, this is how I would apply support resistance lines, at least, bigger picture in the thick black lines, and then more of a short-term levels that are critical on the thinner lines. So let's go to, and you guys have seen me do this 1,000 times, but let's do trend lines now. And this is more in my system. So what I lean on, but are trend line breaks. So you had, and this is an example, we didn't cover it or anything, but this is an example of a fan pattern, right? So you have that level here, then you break through, you come back down, you break through again, and you change direction. You pivoted from a downtrend. This is like a downtrend, quasi sideways, but still not really sideways. And then you go from downtrend to uptrend. And again, what you'll see on my charts is that they mostly look like this. Uptrend break. And one note, and I showed it in the cartoons, but on support lines for uptrends, I draw on the bottom side. For resistance lines and downtrends, I draw on the top. Because it's a dynamic floor and a dynamic ceiling, is all it is. So this is my dynamic floor on an uptrend. I'm looking for when that breaks. So I'd be drawing this in real time. And then on the dynamic downtrend, I'm drawing the ceiling, and I'm looking for when we break the ceiling. So for me, I have my signal system, right? But it's like, I'm looking for trend reversals. That's all it is. So that I can participate in the trend. So I would, you'd see a chart that I just work on is full of these kind of things. I'd start here. Oh, we broke it. Like looking for confirmation. Another high, come up here, finally broke this here, right here. On my signal system, I think was a short here at 60, 61, below this level. So kind of how I draw, I would just start drawing these, like, I see a grouping of lines. Okay, that looks to be a floor. Now we kind of pierced it, came back up, but I'm above it. Now when I break that, could be significant, right? So I broke a floor here, again, dynamic trend line. I broke through that. Now I'm on a new trend. Let's draw that. So we are very familiar with these two lines, the downtrend lines from the $69,000 top, and that would be my primary. And then we had a fake out. We had a fake out breakout on low volume that was rejected, fell back, as we know. We had fallen down here, and then finally we finally made a bottom, or at least a local bottom at around 35. I know it was 33. I think, on the wick. On this line chart, we came down here, and then we finally broke this trend. So, our trend is now, at least for the near term, it's up. Right, so, identifying trends, I use dynamic trend lines. I draw them all over the place. Just trying, and you can do it again on any time frame. You saw my chart from last night on the 1 hour. Took a short, right? Clear signal. Break of the trend line. Break on RSI. That's my system. Short. And then apply trade management. Here, break. You broke this trend line. You broke this trend line. You're looking for trends, and you're looking for when trends may reverse or when they may continue. That's one thing we didn't look at, so let's try to find that, right? So if I'm looking at a trend continuation, I don't know why, but I'm thinking it's easier to do with candles, but for touches. Let's look at, let's erase everything. And I see, like this to me. Then again, I think it's better on a bar chart. But you're looking for touches along the line to kind of confirm it. So I would just start drawing stuff like this. It doesn't have to be exactly like we talked a little bit, or we mentioned penetration stuff, but like you're still riding this trend line. You know, it's kind of, well, it's, did I draw it correctly? Because it's really resistance. But I would just start drawing these lines. And guys, for you at home, pull up your chart, switch everything off. All you need are either the candles or convert it to a line chart. And you can do that in TradingView right up here next to the minutes. You just select and you can change your chart. It's that easy. I can switch back to candles. Or I can switch back to, I like the bar. Or I'm sorry, the line. You know, for ease of whatever. But, you know, this was our summer fake out breakout. We broke back down. We rode this line down. And finally broke the trend. So I'm looking for, again, touches. This one has 1, 2, 3, 4. You know, it's pretty strong. We finally broke it. It was pretty significant. So that's that, guys. I hope that helps. And thanks for watching this. 30 minutes. Again, I'm creating course content that'll be more detailed and more elaborate, but wanted to share with you just some basics. This is probably, again, the most important fundamental building block that you can put in your system is to understand support, resistance, and trend lines. So with that, have a great day. We'll see you tomorrow.